Hello and welcome to today's fast video, which is called PPI Deja Vu. It's going to be the repeat of yesterday's experience. Let's dive into what I mean exactly when I talk about CPI reaction. You know pretty well, and I will be linking to Sunday's video where I had been saying that US dollars somehow next direction is not going to be exactly down, and we have had that experience yesterday. The funny thing is that while forecasting CPI was undershot by the actual data, it was still an acceleration, yet markets decided to act in the end as if they were surprised by it being accelerating less than expected, less than projected, and acted as if it actually did beat those expectations. And that's not at all the case, especially if you look at core CPI. You can see it here in yields, where the initial reaction, the initial move towards bonds strengthening, meaning yields retreating, had given way to yields rising and bond prices retreating. This is the 1 to 3 year bond aggregate that I like to use because this one is more sensitive right now to projections of Fed monetary policy. Here we go with the pre-market stabilization, wait and see. So let's wonder whether markets will again act surprised that PPI had somewhat risen versus what it was last period, last reading, or what's going to be happening as regards the correct reading of the situation. Because arguably, in my view, our job as traders and investors is to keep in touch with what the market is telling us, and we had seen two good, promising intraday attempts yesterday in the S&P 500 to come back against quite unfavorable sectoral readings, where essentially just the tech price had been catching a solid beat, while the rest of the crowd, be it defensive, be it interest rate sensitive, be it Russell 2000, which is more on the just like KRE, interest rate sensitive, this had been sold off very heavily, arguably too heavily. And now we are seeing, is it a dead cat bounce? Is it more? What's going to be unfolding in the hours ahead following PPI? Another fake out and then acting surprise and undershooting that pre-market rejection to go right away lower. For now, this is what we are seeing on the 15-minute chart, and in Nasdaq, which is of course way more stable at the moment, we are seeing a session that is somewhat for now pointing towards interest rate sensitive place. So will it bit stick, or we would get an undershoot of the 6 to 60s low values of this ES level, whether we would get an undershoot, a test of that, because the market breadth ratings on the daily chart of S&P 500 had been quite unappealing, and they had moved lower. The daily candle was on high volume, opening and closing near in a straight line. It's almost marble candle, right? So it's not really looking that good on the daily candle stick pattern. However, have we seen a similar session? Yes, we did. So the only question is whether the markets would follow the PPI path, knee-jerk reaction, in the footsteps of yesterday's CPI. Of course, this corresponds to several other moves, such as the one in oil, where I had traded points for oil turning firmly south, and we had seen an initial evidence of this decision being made early in the week, and we are seeing that unfolding. So what does it tell you about inflation? Inflation varies. So PPI ahead, stay tuned and follow the Twitter feed and my joint page will help you set what's right for invest on what and how you trade. So make sure to have full access to everything that I do. No compromises, right?